Within the results that we've put out thus far, we've actually had our highest grade meter intercept ever on the project, 204 grams over a meter. We've also recently put out some results from an area called Kogina Hill. This is a previously drill tested area that does not have a mineral resource on it yet. We've drilled a number of holes there, made a discovery. We went back to that area as part of this 35,000 meter drill program, had some very positive results, including our third best ever grade meter intercept of 184 grams over a meter.
So hello and welcome to the Assay TV. Today I am very happy to be joined by Luke Alexander, President and CEO of Newcore Gold. So Luke, it's always a great pleasure to be able to catch up with you.
Thank you for having me.
Absolutely. And so it's been a while since we had our last interview. So maybe you could give us a quick overview of Newcore Gold and your Enchi Gold Project.
Yeah, so Newcore Gold, we're advancing the Enchi project in Ghana. We trade on the TSX Venture Exchange as well as the OTC in the US. Enchi is a district scale exploration project that's fundamentally underpinned by very robust economics that we put out in a 2024 PEA, which we're now in the process of de-risking towards a PFS, which we will publish in the first half of next year. We are in the midst of a 35,000 meter drill program, so we're aggressively drilling on the program. We've had lots of good results over the past number of months, and we're excited to continue to get results out to the market over the next few months.
Okay, excellent. And so, as you mentioned, you are working on this 35,000 meter drill program. Are there any highlights or kind of key takeaways from some of the early results that you've gotten so far?
Yeah, so to date, we've completed about 25,000 meters. I mean, within the results that we've put out thus far, we've actually had our highest grade meter intercept ever on the project, 204 grams over a meter. We've also recently put out some results from an area called Kogina Hill. This is a previously drill tested area that does not have a mineral resource on it yet. We've drilled a number of holes there, made a discovery. We went back to that area as part of this 35,000 meter drill program, had some very positive results, including our third best ever grade meter intercept of 184 grams over a meter, as well as some nice higher grade material from surface, grading 3 grams over 13 meters. So very encouraging results coming from our project, and continuing to drill through the rest of this year.
Okay, excellent. And I've noted that you have over 25,000 meters already complete. So, are there any kind of key takeaways from the results that you can kind of share with us?
Yeah, so within that 25,000 meters of drilling, a lot of the focus was on resource conversion. So taking ounces from the inferred category to the indicated category. That's one of the key elements that's required to take our project from a PEA and de-risk it to a PFS. So really looking at tighter spaced drilling to give more confidence in the overall resource. So far, we're very pleased with the results that we've had. We think at this point we've converted, based on our internal modeling, enough ounces to be able to feed the PFS that we're looking to commission in Q4 this year and publish in the first half of next year. The other thing we've been doing with that infill drilling is we've been pushing a number of holes deeper and beyond the existing pits that constrain our resource today. What the potential impact that will have is resource growth. So resource conversion as well as resource growth are two of the key things that we're looking to accomplish with that first 25,000 meters of drilling, and we think we've been successful with that. With the additional 10,000 meters, we are focused on resource growth and your more traditional exploration type drilling, as well as the opportunity at depth, which is to chase some of the high-grade structures that we've identified across our project.
Okay, excellent. And so is this resource growth, is that the key focus for the remainder of this drill program?
Yes, it is. So again, when you look at our project, we've identified 25 targets to date across the project, of which we've only drilled on 9 of them, and 5 of them make up our existing resource today. So going back to some of the previously drilled tested areas, such as Kojina Hill, which I talked about, looking to grow the overall mineralized footprint there with the goal of then wrapping a resource around it and including it as part of our global resource. That's one area we're focused on. All of our deposits do remain open along strike, so continuing to systematically step out and grow the overall footprint of our resource areas to add ounces is something we're also focused on. And then lastly, if you look at these greenstone hosted deposits along the Sefwi-Bibiani belt, where where a lot of them really grow in size and increase in grade is as we start to identify some of these high grade feeder zones that exist on other deposits and we think exist at our Enchi project. We've identified a number of those, and at the moment we've got a diamond drill rig turning, which is targeting some of those high priority targets for us. So really excited to start to get those results back in the next few months.
Okay, excellent. Well, we'll definitely have to catch up once you have more results to share with us. So as you mentioned, there's a kind of focus right now on taking Enchi from a PEA to a PFS at the end of this year and into early 2026. So, can you provide some ongoing developments related to this PFS?
Yeah, so again, we outlined a very robust PEA in 2024. If you look at the economics that we outlined within that PEA, if you look at it at a $3,000 gold price, you're looking at an after-tax NPV of 970 million, after-tax IRR of 136%, and less than a 1-year payback. So very strong economics. Our goal now is to take it from a PEA and de-risk it to a PFS. So we talked about the infill drilling. That's one of the key components. We think we've now completed enough drilling to be able to move to that PFS stage. Beyond that, we're doing some additional metallurgical diamond drilling to collect samples to then be able to do additional test work from a metallurgy perspective. We're doing hydrological drilling, geotech drilling. We're doing some additional environmental and social baseline work on the project. So all of those aspects and other areas will then feed into that PFS to ultimately give more confidence in the project and what the economics ultimately look like. And really a big part of the motivation for doing that is that, PFS stage projects will trade at a higher multiple in the market than PEA stage projects because of all of that de-risking work that's been done and the additional confidence that provides for investors and corporates and others in terms of the value of the project. So all of that work's happening in the background. And again, we'll commission that PFS in Q4 this year and look to get it published in the first half of next year.
Okay, excellent. And so just looking at the market conditions, we've continuously, I think it was yesterday, saw another record high gold price. So, with these changing dynamics, and they've shifted quite a bit since you actually released the PEA in 2024. So kind of how does that change your views around the project development and potential?
Yeah, so to put it in perspective, I mean, the gold price has almost doubled from the base case of 1850 that we used in the in the PEA in 2024. So needless to say, gold is trading at much higher levels than it was when we published that PEA, when we published the PEA. So one of the other things we're looking at internally is doing a bunch of different trade-off studies to see how we can potentially optimize the project further to obviously capitalize on the fact that we are trading at record gold prices. We don't need record gold prices for this project to have very robust economics, but obviously in this kind of environment, we're keen to extract as much gold as we possibly can. So we're looking at different ways of ultimately accomplishing that.
All right. And so just looking at Enchi and the development work that's happening there, what is the longer term vision for the project moving forward?
So the longer term vision is to ultimately take it into production. I mean, if you look at the economics that we outlined, very robust economics, we'll now move it to a PFS in the first half of next year. On the back of that, we will then look to take it to a full feasibility study. And then, at that stage, we'll look to fund the project into production. One of the advantages we have is Ghana is a jurisdiction where we've seen a lot of mines built. It's the 6th largest gold producer globally. We've got a government who's very supportive, wants to see projects built and put into production because they recognize the economic benefit that provides for the country as well as for the local communities. So we're in a country that wants to see projects built, and when you look at Ghana as a whole, our Enchi project is one of the 2 most advanced projects in the entire country. So we've got that advantage that we're well along the development path and ultimately have a government who's going to want to see us take that step into production.
Okay, excellent. And then looking at financials, how well funded is Newcore to kind of progress Enchi kind of to this next level?
Yes, if you look at our last reported cash position, we had $10 million of cash in the bank. One of the important things to highlight is that we do have a lot of warrants that are in the money. We've actually got 8.5 million warrants, which are expiring on September 26th. Those warrants have started to trickle in and will bring in a total of about $3.5 million of cash. So that's an embedded financing that would take us up to call it $13.5–14 million. And then beyond that, we have an additional just over 20 million warrants that are well in the money at the moment. Those have a strike price of 50 cents and they expire in February, so about 5 months from now. That will bring in an additional, just over $10 million of cash, assuming obviously the price stays in and around where it is today. So we're extremely well funded with additional cash that's coming in, which will allow us to potentially expand our drill program well beyond the 35,000 meters, get additional work done beyond all of the work that we've currently got budgeted with the PFS. So we're very well positioned from a cash perspective. I think it's also important to highlight that we are 55% institutionally owned. So these are deep-pocketed, long-term focused mining and precious metals investors who love the optionality that we've got within our project. A very robust study that underpins the value with district scale exploration layered on top. So those investors want to see us move this project forward. They want to see us aggressively drill and remain very supportive of that strategy. Beyond that, management and board, we own 15% of the company. So we're truly aligned with shareholders and are here to create a significant, value re-rate for investors.
Okay, excellent. And then we've already talked about kind of doing the extra drilling, the remaining 10,000 meters and bringing the project to PFS stage. Anything else that investors or viewers should be on the lookout for in the next 6 to 12 months?
In the next 6 to 12 months, expect to continue to see a lot of drill results. As I highlighted, we've got an additional 10,000 meters of our 35,000 meter drill program that we will release over the next few months. Q4 of this year, we will commission the PFS with the major catalyst in the first half of next year. We'll, in my view, be getting that PFS published for the market. Additional capital coming in from those warrant proceeds and the ability to potentially expand our drill program. Those could be catalysts for the company as well. So we will be very news flow heavy over the next number of months.
Okay, excellent. Well, we definitely look forward to catching up again soon, whether it's online or in person in London in November. Either way, Luke, I want to thank you for joining us here today.
Thank you for having me, Amy.